Hey Achievers, it's the beginning of the month and it's time for another episode of Beginners Investing. This will probably be the hardest video oh my god I've ever done because I tried to time the market and I lost over 40% of gains while doing it. But before I tell you what I did wrong and how you can avoid it, let me tell you a little bit of the backstory. It was 2017 and I was reading Tony Robbins' Money Master, the Game. You know this, it's one of my favorite books on personal finance and it's a pretty good summary for beginners of all the things you should do and you shouldn't do. So of course, inspired by the book, I decided to open up an investing account and start investing. At that time, I had some money aside, so I decided, okay, I'll just put it into the market. And as every single sensible beginner investor, I started reading on different things about the stock market. And after that, I put most of my money into ETFs and blue chip stocks like Apple, like Facebook and Google and so on. Right at the same time, I was starting to get familiar with the works of Ray Dalio, and he's a great microeconomist and an investor, and I'm a huge fan of his work. So I was reading on his books and on the free videos that he has online, and I was studying them and I was like thinking, okay, he says that every 80 or 100 years there's a huge debt crisis in the world, and every 8 to 10 years there's like a smaller short-term debt crisis. So the last big crisis was like in 2008, so we're right about 10 years from then, and we're probably due to another crisis. So I was like, okay, what will happen if I try to time the market and pull out my cash relatively near to the top of the market and then buy again when the prices are much cheaper? And I did this absolutely consciously, although in the book of Tony Robbins says with like big letters, don't try to time the market, and there are a lot of studies how you're gonna lose money overall and so on, so on, so on. Yet I decided to do it. I was a beginner, I was like a guy who has some money, and I wasn't afraid to lose, or let's say not make more money, and I was like, okay, let's see what will happen, because experience is the biggest teacher, I guess. In the spring of 2018, I started my investing with buying some ETFs which track the S&P 500 and also the tech sector. I'm a huge fan of the tech sector, and I decided that this is one of the best ways to invest in them. And all went well. After that, I added some more Google, also some Facebook, and some other stocks that I truly believed had the potential to have gains. And that's what happened. You know, for quite a lot of months, I was steadily gaining the amount of money in my portfolio. And then in late 2018, the correction of the market happened, where the market lost like 10 or 15% in a matter of few months. And the best part was that I didn't get panicked back then. I was like, okay, this is part of investing. You know, it cannot only go up, it has to go down. And you know, I stuck to it. I wasn't scared, although my portfolio was actually losing money and I actually had less money than what my initial investment was. So it wasn't a great experience, but I was like, okay, I have to stick to this and just hold the stocks for the long run. The bad thing that I didn't do at that time was take advantage of the situation. Whenever there's blood on the street, good investors buy. And I didn't buy the dip because I wasn't feeling secure enough, let's say. I was expecting that this is the huge deal. This is going to be the big crisis and so on and so on and so on. So anyway, I didn't buy anything, I didn't sell anything, and the market continued to rally on. And I was happy with the gains that I was making. But then the news started talking more and more about the coming crisis. And you know, I was watching Ray Dalio interviews pretty much almost every day, and he was like, we are up for a huge correction, maybe even a Great Depression. So that was kind of scary. And keep in mind, at that time, I was still not reading at all about investment. I was just looking here and there, but not really studying the art of investing and also of mental health when it comes to investing. So at some point, it was the beginning, or actually it was the summer of 2019, so a year and a half into my investing career, and I decided to start selling. So I did sell pretty much most of my stocks for quite a good gain. For example, Apple, I had like 15% gain. Facebook, I got like 12% gain. On the tech market, I had like 12% gain too. So I was quite satisfied with the results. Also, I was quite convinced that we're due to a crisis, so I will be able to enter the market on a much cheaper level and have these great deals of stocks and just be like the genius of an investor and double my investment portfolio in no time. Well, it kind of happened like that. So after I sold, the market rallied like a beast, and then the Ronnie situation happened, and we all know what happened. There was a huge drop in the market, and guess what? I had some dry powder, so I had plenty of cash, and I didn't invest it. Oh my god! I don't know why, guys. I have no idea why I did. Like, I was expecting the market to go even further down, and I was really trying to find the bottom, which was like probably my biggest mistake. Like, even though I sold early, that was fine, but not buying into the huge dip that we had was probably my biggest mistake ever. But this wasn't my only mistakes, because once I sold all of my stocks, there was a period of about 6 months when I was watching the market on the biggest rally of history probably, and I was like itching to get back into it and not lose. I was having this FOMO, fear of missing out. And of course, I started little by little putting money into the market back again. I still kept like 80% of my portfolio in cash, but I tried to get some good stocks. So for example, I bought a company that produces silver. Also, I bought like Uber and Upwork, businesses that I personally like, and also Twitter. And at that point, these turned to be also my first big losers, because then the Ronnie situation happened, the market dropped, then it started recovering, then I tried to sell for, let's say, not too big of a loss, because I was expecting the market to fall again and again and just hit rock bottom. And then so I was having this discussion in my head, like, I'm going to probably have more losses to already positions that were on minus, so I better sell now and then try to re-enter again and make everyone happy and look like the genius that I wasn't even close to. But the worst of all is that I did all of these operations, I had all those thoughts in my head and my feelings were going nuts, and at the same time, if I just forgot about all of this portfolio and never even touched it, I would have made huge gains. And I'm not talking about like 10-20% gains, guys. Let me just show you a few examples. I had Apple stocks at a price of 173. Right now the stock is about $500. I bought Facebook at 160. Now it's close to 300, almost double. It's just crazy. Even for like one of my worst investments that I sold with a loss, like Twitter, I lost 16%. If I just didn't sell and stuck to it, I would have made $100, or about 10%. And the list goes on and on and on and on. After all of this, I decided to get really serious about investing, and I decided to do this video series for you guys. I want to help you try to avoid all the mistakes that I've done. And although experience is the best teacher, and to be honest, I don't really feel sorry about all these mistakes that I made, because I've learned so much and I kind of have the clarity of mind that I did it as a beginner investor, and also in theory, I didn't really lose money. I'm actually a little bit plus. I just didn't make a lot more. But I'm okay with it. I was a complete beginner, and that was my way of kind of studying and learning and getting skin in the game while trying to get better. And I don't really lose sleep over this, guys. I started with a fixed amount of money back in 2017 and I haven't really invested more into it. Anyway, that's more than enough of me rumbling about my investment portfolio. Thank you guys for watching. Make sure to subscribe for more videos like this. Let me know in the comments down below what else you want to see and what other kind of mistakes you want me to make or talk about. And I'll make sure to do a video about it. I'll see you in the next one. Ciao.